All right. The next one I got is from the latest guidance on the PPP loan forgiveness. So I think we talk about this every week. New developments in the SBA PPP loan and loan forgiveness. So this is the latest. I guess the SBA issued May 23rd, uh, supposedly clarification on the forgiveness process. And so it probably opened more questions than it answered. So the first thing it tried to say was the SBA will review all of the information on the application that includes eligibility, although people below 2 million will not get uh, examined as to whether or not they self-certified as needing the loan at that time. But they will look at the loan amounts and the use of proceeds, loan forgiveness amounts. They're going to dig into what those payroll amounts are. And so they'll start there, and they're going to review the applications regardless of size at any time before the forgiveness is done. And they may require to maintain records, or they're going to require you to maintain records for 6 years afterwards. It's forgiven or paid in full. And so the questions I think that are unanswered for that at this point are unanswered are types of payroll, especially for nonprofits that are uncovered or not, or separately covered, and has been seen as double dipping. For instance, if you have a federal grant that covers wages, they haven't made any kind of clarification on that. The general consensus is that those are not forgivable portions of payroll, but they haven't really struck a clear definition of that. So everybody's going along with those are not, those wages are exempt from the calculation of what will be forgiven. The other thing that's unclear right now, because it's still up in the air, and we have some information on that, is the bill that just passed on yesterday or Friday, May 20, what is today, the 9th? May 28th or 9th, that went through the House, that kind of goes into expanding the time that you have to use the loan, and then also like the amount, the 75-25 rule of 75% has to be towards payroll and 25% has to be for other things. And so that recently got passed by the House, and they're wondering if that's, but it hasn't passed the Senate or been signed by the president. But what it does is the highlights of that now going through would expand the covered period from 8 weeks to 24 weeks, extend the PPP through 12/31/20, expand the maturity from 2 to 5 years of the loan. And then there's a couple other ones. We'll revise the 75-25 to a 60-40 rule, 60% payroll, 40% interest, rent, utilities as such, non-payrolls, and then a deferral of principal, interest, and fees until the date the lender receives payment for forgiven amount of loans, or 10 months after the end of the covered period. So who knows? It's a wait and see, but I thought I'd give you guys a chance to kind of dig in and get your perspective on the new rules.
Well, I think it's I think the statement that comes to mind is it's not over till it's over kind of thing, because like what you just brought up, and yeah, great summary, AJ. And just for our audience, I want to timestamp this. We're talking about this as of May 29th. And so, things on the PPP have been changing sometimes on a daily basis. And to that point, the SBA had already issued kind of an application, what the application might look like, or what the basic application data would look like for forgiveness. And now, as AJ just reported, Congress is debating whether we even are going to apply the 75-25% rule, which has been in the regulations from the beginning of this whole thing. So that brings us to this whole point that it's not over till it's over. And I know a lot of businesses are trying to. I think you've got like three categories of folks. You've got certain folks, and I see the same thing in tax practice from having been a tax consultant, a corporate tax consultant, that when there's new tax law and it's being debated in Congress, a lot of times you have clients and companies that want to discuss it and have advice on what the rules are before the rules are actually settled. And usually in those cases, we just have to say, as professionals, the rules aren't settled yet. If you really want to spend time and money on on doing what ifs and talking about here's what might happen if it goes this way and here's what might happen if it goes that way. We can do that. But a lot of times in my experience, when I talk about categories of people asking these questions, you've got some businesses and entrepreneurs who are just anxious. They just want to know. And I think identifying kind of why you want to know and what's important here is good, because I can understand the angst and just wanting to know. But the truth is we don't know. It's not over till it's over. And you're not really going to know for sure because of the way they've been playing this PPP game. I don't think we really know for sure until the applications are hitting the banks, because up until that point, it's still you're still gonna have the Treasury saying things, and you're gonna have politics being played, and you just never know what new thing can come out. And not for nothing, even after the applications hit the banks, there could be a reversal of something, right? But at least you're kind of closer to more of a determinative point when that happens, when your bank actually is accepting an application for forgiveness and you're having to do the calculation at that point. That's kind of when well, here's all the rules that have been stated so far. That's what we have to go with, right? But if you're not there yet, you're not even ready to submit, then if you're just anxious you just want to know, you're just going to have to chill out and sit back and say, hey, we don't know for sure. I think there's a second category where it's more than that they just that they want to know. They actually got the funds and then they said, oh shit, if we can't get all of this forgiven, we're not going to spend it. Or we're only going to spend the amount that we get forgiven, and any other amount, we're afraid that we wouldn't be able to fund the payback later, because whatever is not forgiven becomes a loan, right? And so there is a payment period there. I don't know if either of you guys remember what that is. I don't remember that off the top of my head, but the part that's not forgiven.
Yeah, the baseline that they came out with was it's a 1% interest loan and payable back at 2 years. And I can't remember if the 2 years is at the end of the 8-week period or if it's at the beginning. It starts at the beginning of the loan. But I think, if my memory serves me right, it's at the end of that 8-week period.
That sounds right.
And one thing we have to also remember about these loans is that they didn't require personal guarantees. So if your business got the loan, and then if what you're thinking is, oh, I may get this money and then I may still not survive as a business, I may go out of business, and then what? Well, and then presumably you walk away because you didn't provide a personal guarantee for the loan, right? So I think there's the second camp that's they're like worried that, well, whatever I didn't get forgiven, I have to pay back, and what do I do with myself if I have to pay money back? But I think, that's probably, the fact that you actually have a period of time to pay it back, it's like, well, if you need that money, you still need it, right? Whether it gets forgiven or not, you still needed that money to get over this hump. And if you need it, then you use it. And then you're using it in the hopes of your business survives and then generates future cash flow to pay the loan back, right? So from that standpoint, I would again say to that group of people, I can understand the angst of wanting to know how much is forgiven because maybe you're going to try to avoid spending it. But I also think there's a little bit of misguided thinking there, in the sense that you probably just have to spend it anyway. There probably isn't as much of a decision to make as you think there is. But then you got the third camp, which maybe doesn't literally need the money. They got the money. They could just, have it in the bank, and they actually don't want to spend any of it unless it's forgiven. And so what they're really doing is they're really trying to figure out what the game is, right? They're playing the game. That third camp's playing the game, and they're wanting to know every possible corner case of, can I pay this or can I pay that, and will that become forgivable under the PPP? Because if it is, then I'm gonna shove it into my 8 weeks of expenses right now, so I get something else that gets forgiven, right? And that's probably a pretty big camp. And so, sure, like if you're trying to play the game, you want to know the rules of the game. But I think that's kind of the nature of what the federal government's done to us here, is they're not letting us play the game because they're not telling us the rules. There's not a game to play because you don't exactly know the rules. So I would advise, hey, forget the game, just spend what you need to spend to survive, which was the intent of this to begin with.
I think you missed the camp, Ty. The fourth camp would be all those good-hearted CPAs that put together the forgiveness worksheet and then gave it out for free, and now have to go back and adjust that and like
That's
day by
right.
day to match the upcoming. Yeah.
That's right. The rules as of today. Yeah. And
So
yeah, you know,
yeah.
that's on that point. We often get asked by our colleagues of saying, "Oh, well, you know, you do non-traditional services. Why, you know, your CFO advisory services. Would you do PPP consulting?" You know, and we do consult about the PPP with our existing clients, but we're not taking on clients just to do PPP consulting, because what are we going to tell them? We're going to tell them the same thing we're telling everybody on this show right now, that the rules are not set. You don't know what the rules of the game necessarily are. And by the time we get to the point, where there is definite more clarity and people are submitting applications, that time period is going to be very small. It's going to be like, okay, now within a few days, everybody's submitting applications. We're not chasing clients to just serve them for like 3 days out of the year. So I think that's the, you know, that's the issue with that, is that, yeah, I mean, we are helping our existing clients with PPP, and but we're not out there trying to find clients just to do PPP consulting for them, because it's too short of a time period, too limited of a scope of service, and we can't really do just that for somebody right this minute anyway.
I'm going to make a bold prediction here. I'm going to say that all of those LinkedIn and kind of marketable CPA, those ones that usually pander towards expanding your client list or making more per engagement, I'm making a prediction that they're going to switch gears here in a second and will go after one-time clients and start advertising for this service at a good amount of money probably when this comes up.
Well, for sure. And I think the piece that I'm being cavalier about is, maybe you do a one-time service for a client, you do really well, and so then you pick them up as a client for life, right? So just because you get engaged for that one limited service doesn't mean that's all they. And that, I had a colleague that happened with her. She runs a tax practice a little bit out of town here, out of the metro area of Portland, Oregon here, and she had that exact thing happen where she provided better advice for free to a small business on how to handle their PPP than their existing accounting firm was providing them. And so once they got through that, they went to her and they said, "Hey, you did this for us for free. Here's how much we pay for our tax work every year. We're bringing it to you." And so those things do happen. So I think you're right, AJ. It could be a good lead thing for some businesses.
Well, and totally. And just putting myself in the perspective of the people who are buying that advice and then buying into it more, I would think that working with that short timeline and constantly changing rules, but then being able to give a good answer would, you know, instill a lot of confidence in that client going forward. So it'd be kind of a very special, you know, way to engage. Yeah. So
I might add that practitioners that are thinking about that probably need to do a longer think on it, as you're kind of branding yourself as a last minute, can get in there and do it on the turn of a dime kind of person with this PPP because it's so short. Do you now want that to be kind of your identity or brand, that you're somebody that can come in there immediately and fix something? So, I mean, it's something to think about for the practitioners out there that are considering that type of work, that we're not, but if you are considering it, consider the effect it would have on your brand, I think would be another point to make.
yeah, that's very true. Because I could totally see you getting set up as, you know, getting that image and then having everybody think that everything has to be solved immediately, even when it's brand new, because you did it that one time, you know.